So I would like to welcome everybody to SBA's 45th webinar, Understanding Insurance for High Performance Builders. My name is Hamish White, and I'm one of the founding directors of Sustainable Builders Alliance, and I am the director of Sanctum Homes, and I'll be your host for this webinar. In the spirit of reconciliation, we would like to acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to elders past, present, and emerging, and we extend our respect to all Aboriginal and Torres Strait Islander people today. And today I am joining this webinar from Wurundjeri land, which is the land around Burrawang, which is the Yarra River here in Melbourne. Now, I would imagine that a good chunk of the people joining us today are high performance builders. And for those who know building physics and building science, as we start changing the physics of the building, we are also increasing our risk if we get it wrong. And a lot of the times, as high performance builders, we're not competitive tendering. So we are part of, I guess, that ECI or PAC or whatever process you want to call it. We call it pre-construction at Sanctum Homes. And we're actually giving advice. And I know one of the things that I'm really excited about hearing today is the whole part of around indemnity insurance, because I know that I'm probably walking a very fine line when it comes to giving advice and maybe not having the right insurance. We certainly have all the other insurance that we need as a building company. So yeah, look, today's webinar, we're going to cover why these covers are becoming increasingly important for builders working on high performance and sustainable homes, the key difference between contract works, public liability, and professional indemnity insurance, how contract works insurance operates, including turnover declarations, project values, and runoff cover, and why accurate reporting is critical. Real-world examples of common risks and claims facing builders today, an overview of other important business protections, including management liability and cyber insurance. And we are proud to launch today the new Sustainable Builders Alliance insurance products, including contract works insurance, design and construction professional indemnity, which is going to be available to all of our amazing SBA members. So by the end of this session, you'll have a clearer understanding of your insurance responsibilities and practical knowledge to help ensure your business is properly protected. Now, today we are joined by Daniel Weber, one of the directors of Weber Insurance. Daniel has a deep expertise in professional indemnity and complex, non-standard risk placements. Since joining the business in 2013, he has played a central role in shaping Weber Insurance into a thriving commercial brokerage. Daniel works closely with clients and partners and underwriters to deliver tailored insurance solutions for businesses operating in specialized industries. He is known for his practical solutions-focused approach and his ability to navigate complex risk scenarios, helping clients understand their exposure and secure the right protection. Now, today, obviously, our webinar is brought to by one of our platinum sponsors, and that is Weber Insurance. Now, I won't go into how people can get in contact with Daniel because I'm sure he's going to talk about it throughout his presentation today. But I will just quickly, in terms of protecting ourselves, just do a little bit of a disclaimer because we do need to cover ourselves. All content provided by Sustainable Builders Alliance is for general guidance only and should not be relied upon as specific advice. Independent advice and verification should always be sought where required. Views expressed are those of the presenters at the time of publication and may not reflect those of Sustainable Builders Alliance. All right, so let's kick it off. So Daniel is going to talk today or present today for about 30 or 40 minutes. And we're going to have plenty of time at the end to have some Q&As. However, if there is something that grabs your attention during this presentation, Daniel has said, please, by all means, pop your hand up or pop a question in the chat or the Q&A, and I will jump in and ask the question if it's something that I feel or you feel is important to kind of flesh out. So Daniel has given me full autonomy to interrupt whenever I feel like I want to. So without further ado, mate, I'm going to throw it over to you, turn my camera off, and we'll get cracking.
Wonderful. Thanks, Hamish. Thanks for the pump up. All very kind words, and Always great for a roaring introduction just before dinner. So I appreciate everybody tuning in, and promise it won't be overly dry, but we're probably limited with the material we're talking about. But hopefully you bear with me. Um, so I like Hamish's disclaimer. He's obviously got some great advice, and as with everything else insurance, we need to also have our disclaimer. Information we're talking about is just general in nature. We can obviously give personal advice. It needs to be done in a more of a one-to-one setting where we can factor in your own circumstances. So take all this as general, but by all means, we can give you the personal advice that you need. I'm going to talk today about primarily contract works and professional indemnity. I'm not going to touch on homeowner's warranty or building indemnity or builder's warranty, depending on which state you're located in, is what it's called. We're just going to leave that topic alone. But if you have any pressing questions at the end, we might be able to go over it. Hamish kind of alluded to it in his introduction about, why does it matter with high performance homes, maybe more so than your average punter, in terms of building. The methodology with high performance, can be more complex in the design and construction methods. The materials, maybe they're newer, maybe they're not as, tried and tested as your old, bricks and timber and glass. So there's a bit of variability there. And expectations as well from your clients. They're signing up for high performance. They have certain expectations. If you're not meeting those, then they can start asking questions and holding out their hand for some money. So just to kind of frame what we're going to talk about, I think it's important that we understand that. I think that the risk isn't egregiously more than your average builder, but you do need to consider that that there is potentially a little more risk, and the professional indemnity is really what we're going to touch on. So this, just to kind of introduce what we're talking about, and you'll see I got contract works there with two separate sections, and that's to help kind of visualize and understand that contract works is primarily a two-section coverage. It's got material damage, which is for physical loss or damage. We're talking to the works, the building, the materials, the site itself. And then we got public liability, slips, trips, falls, injury to other people, damage to other property. It's possible to have a claim under both sections of the policy at once. If you start a fire, damages a neighbouring property, you're going to lose your project and potentially the other. So where possible, it's a good idea to have both covers on the same policy. Certainly not essential, but yeah, we would suggest, if you're sitting there as a builder of any description, and primarily as a principal contractor, if you've only got public liability, I would suggest looking into that almost immediately to consider what your exposure for material damage is. It's relatively straightforward to get, but it does a lot in terms of coverage. The next one that we'll have a good focus on today is around professional indemnity. So we're talking allegations from professional negligence, services that you're providing, design, specification, or other services. It's a bit of a misconception that I don't provide design, so I don't have a PI exposure. I'll kind of go through that a little bit more as to areas that you can kind of get caught out. But professional decisions or implied advice can occur at any stage. You don't have to be contracted to provide those services, and you don't actually have had to make a mistake. In professional indemnity land, a lot of the claims costs are purely for defence. So you get an allegation from your client, the insurer steps in and fights a legal battle on your behalf. So you'll find that in a professional indemnity matter, often the legal costs or the defence costs will outweigh or be equal to what the insurer actually pays out. In a lot of situations, the insurer just pays legal costs and nothing else. So the professional indemnity, if you think about it as a first line of defence from a legal point of view, then obviously the claims costs associated with it. So starting with contract works, and we'll focus on material damage, which is often referred to as Section 1. So this is kind of the, you can have a contract works policy without public liability, but you can't have a contract works policy without material damage. So material damage is kind of the core coverage of a contract works. It protects the work, the physical loss or damage to the site while they're in progress. So usually things like fire, storm, theft, malicious damage, accidental damage. Geez, I didn't proofread that very well. That's a few typing errors, so I apologise. Promise we'll get your insurance done better than that. The cover can include the works and also existing structures. So I think that's an important one for builders working on renovations, alterations, additions, because existing structure, the way that it typically works is if you flip your attention to the insurance that a client or a homeowner has on their property, it's usually home and contents insurance. Their policy will have a caveat or a restriction that says when your home is under renovation and when the renovations exceed X amount of money, there's no cover on your home insurance. So essentially that makes your home insurance null and void. You need to then, or the client needs to have their property or the existing structure insured a different way. And the mechanism for doing that is on your contract works policy. So they can't just go out and buy contract works themselves to insure the existing structure. It needs to be done in kind of lockstep on the builder's policy with the value of the works. So you don't need to be insurance experts to have these conversations with your clients. Just know that in situations where you're doing renovations, extensions, alterations, additions, generally around 250,000 in terms of value of work is where insurers kind of have issues. Some might be lower, some might be higher, but that would be a good trigger conversation to have with your client. At least say, hey, check your home insurance, make sure there's no issues. The other problem you would usually see on a home and contents policy is if they're going to be vacating the property. Most policies have unoccupancy conditions of 60 or 90 days, which means, once again, if they're out of the property for that long, coverage becomes either restricted or null and void. You might be thinking, well, I'm not touching the existing structure. I'm just adding to it. So my exposure is the value of the works. If there's a total loss that includes the existing structure, a claim and redoing your work and getting paid for the full build again is a hell of a lot easier when you're just dealing with your own insurer rather than dealing with, a home and contents insurer plus yours. So yeah, I know some people are hesitant to include existing structures on their policies, but I would keep an open mind to it. And at least have the conversation with your clients, because that is an important area that people can get wrong. From a material damage point of view, the materials are usually covered whilst they're on site, whilst they're off site, in transit, in storage. It's pretty broad. So, if you've got aluminium at a shop fitter getting custom windows built and they get damaged in transit, or they get stolen from the shop fitter's work site, you've paid for them, usually that sort of thing is picked up. So it's quite broad in terms of the scope of where your materials are covered. Tools and plant as well can be added. It really depends on how much you've got and what you've got as to whether it makes sense to do that on a contract works policy or whether you might be better to have a separate insurance for that. Tools cover on a contract works policy is usually more restrictive than what you get if you buy it on its own. It limits replacement value times, like it'll only give you new for old for 2 or 3 years, and it will kind of have a few other limitations around where the tools are stolen. They might have to be locked in a car. So if you've got your tools on your contract works, it's worth at least considering if it's best on there, or if you might be able to get that done separately. Hamish alluded to this as something we'd be talking about, and this is probably one of the areas that we spend the most time working on, and particularly with issues, is understanding the difference between turnover, also referred to as transfer, and runoff insurance. And it's not going to be in big, huge lights on your insurance policy. It'll have a very small section about, how the policy is calculated and what basis it's on, but it makes a huge difference to how you declare projects and what projects are actually insured. So I would say of all the issues that we have with projects not insured, it's generally due to a lack of understanding or a failure to declare the right information on your renewal declaration. So a turnover policy, you usually have to declare all the value of works undertaken in the 12-month period. So if you do 50% of $1 million house, you declare 500,000. And then if you do the other 50% in the next 12 months, then that gets allocated there. With a runoff policy, if you start the works today and your policy renews tomorrow and the value of works is $1 million, you declare $1 million in the existing period, even though 99.9% of the project will actually be done next year. It goes against the period in which you commence the project. So really important to make sure that you understand how your policy is based and that you're allocating the right values to the appropriate period. If you're not sure, ask your insurer or your broker. It should be written on your declaration. It will definitely be written on the policy or in the policy wording. Like I said, it's not always super obvious, but this is a big problem in the industry. The other thing to be mindful of is when a policy is on a runoff and it's covered. Let's say you start a project today, you've got a 24-month indemnity period, meaning that the project's going to go for 2 years effectively. You might start it today, the policy renews tomorrow. You're still working on the policy that was in place today for that period, which is important. If it's going to run for 3 years, you need to, in 18 months or 2 years' time, still remember that you've got a 24-month indemnity period and get that extended. So it's really important that you keep track of your projects, or you've got a broker that understands the difference and that you are staying on top of project durations, project values, and you're complying with all your obligations. Which one's better? Different for different purposes. The argument would be that runoff is quote unquote better because it covers your policy due to completion, and you might not have to, keep insurance for as long, but there are little wrinkles either way. So I wouldn't say one is necessarily better than the other. It's how you spread premium, it's how you declare projects. A turnover policy, you're going to be subject to new rating every year. So if you have a runoff policy and a project goes for 2 years, you're locking in effectively at 2026 rates versus what you would pay in a year or two's time if rates go up. So yeah, there's no exact science as to which one is better. It's just understanding which one you have. And if you are going to change insurers, going from one to the other, like going from a turnover to a runoff, gets a little tricky. So you really need to be across that. The other section on contract works is the public and products liability, sometimes referred to as general liability, general products liability. effectively, there's two sections. The public liability for essentially undertaking the services, so swinging a hammer, moving beams around, that sort of thing. And it covers property damage or bodily injury occurring from your business activity, which would be your home building or whatever you've got that disclosed as. And the products liability, which is the same sort of thing. You're covering personal injuries or property damage to third parties, but arising not from what your business is doing, rather what the products are doing. So, classic example, a pipe lets go and floods a property. That is going to be more likely a products liability rather than a public liability. Subcontractors is a good question we get a lot. Subcontractors should carry their own public liability. Depending what they're doing, they probably don't have a need for the material damage contract works, but they should have it. Part of your onboarding process should be to ask all your contractors for copies of their insurances, and you should maintain them on file, as well as having some sort of written agreement with your subcontractors that addresses things like serviceability, indemnity, liability, all that. I understand in construction it's easy to not do that and kind of push through when things need to get done or time gets tight, or contractors don't want to sign agreements. But the way contract works, particularly under the liability section, it relates back to the contracts you have with your clients and the contracts you have with your subcontractors. So it's really important that you kind of give that some attention, because nobody really cares about doing that until there's a huge issue. And the first thing you do is look back at your file and realize that, you don't have the contractor's insurance and they've nicked off and you can't find them. So yeah, really important you kind of include that as your onboarding.
Hey, Daniel, I'm just going to jump in quickly, mate, because Andrew's actually asked a really good question. Does the product's liability continue after you have finished the project?
Yes, it does. It does. So on an annual contract works policy, the product liability continues after. So the check your policy, obviously, but generally the way it works is the material damage will be defined for a period. So it'll be your construction period plus your defect liability period. Your public liability will be both the construction period, liability period, and then any other kind of loss that arises in connection with your business. So yeah, if you've built something now and in 5 years' time there's a product liability issue, provided you've got suitable liability insurance under your contract works, then it will respond or should respond to that loss.
Well, I don't know if you can see the follow-on question from Andrew. So he's also said, so if a window manufacturer forgets to put a sub-seal end on a window,
Yeah.
is that covered?
Yeah.
Like those kinds of things? Because I mean that could
Yeah.
lead to
Yeah.
tens
Water
of
damage.
thousands of dollars. Yeah.
Yeah, we actually had a claim. We had a builder that had a water damage claim that, kept getting worse over time. And yeah, this one was more to do with something to do with the roof, I believe. But yes, if in that situation, the window's gone in, the seal's not doing what it should be, there would be negligence there because it wasn't, installed correctly, manufactured correctly, done whatever. The client litigates you years down the track. The intention of products liability is to cover that sort of thing. Where this gets interesting is if you're a builder that takes on single project cover and doesn't have an annual policy, the answer to that would be no, there would be no cover. So
Right.
you would need to have annual contract works, and you would need to have cover at the time of the loss, which if it's gradual leaking, it gets a little murky. Usually they'd probably treat that as the time of the demand, but you need to. This is why we have discussions with clients about single project versus annual project. Annual project with respect to products liability is hands down better.
Yep. So if you brought up litigation before, so
Mm.
does the client actually have to sue you for that to kick in? So can we make a claim, I guess, without the clients going down that litigation path? So say there's a leak in a roof and
Yeah,
we need to go after the plumber. Do
yeah.
we turn around to the client and say, well, you're going to have to sue us for us to kick this in?
Um, not sue. Generally, the trigger is a demand, and that can be
Yeah,
in the form
okay.
of an email. You know, a
Yep.
client can send you, "Hey, like you stuffed up this window, you didn't pull the seal in. Now, you know, I've got quotes to repair the damaged chip rock. It's 40 grand because I now need to take out my heated, you know, tower or whatever.
Sure.
Insert
Yep.
reason." What would happen in that situation is, yes, the insurer would respond to that, and whether that is from a legal perspective. So depending if they're going to fight it or try and settle it,
Yep.
if there's some meat in it, what they'd usually do is appoint a loss adjuster. The loss adjuster or an assessor would kind of quantify the damage, make sure it's reasonable, make a
Yep.
recommendation to the insurer. They might say, "Hang on a sec, this is not our guy's responsibility. You should fight this," or "Yeah, we're dead in the water. You just pay it. It's good." And then what the insurer will do is potentially go and seek recovery off of the window manufacturer. And this is where it's important to understand what
Yep.
contracts are in place between the parties as to what their ability is to go and seek those recoveries.
Yep. Yep. Cool. Yeah, and that was a good question by Andrew. I think
Yeah,
it was
great.
worth stopping. I'll let you keep going.
Yeah, keep going. I love it. More questions. Keep going. Um, so now we're on to professional indemnity, and this is probably like the more challenging aspect for builders and something that we have a lot of discussion around. Typically, the losses are financial in a professional indemnity, not always, but they always end up costing money. So builders can be sued for decisions, not just defects. I mean, that goes without saying. So if a client suffers a loss because of your advice, selection, supervisions, project decisions, you know, the PI may respond. And the common thing we get all the time is, "Oh, well, I only build. I don't. I'm not designing it. I'm not engineering it. All that sort of stuff." That doesn't remove your professional risk, and more importantly, you can't actually stop your clients from litigating you based on their perception. Um, Professional indemnity responds to actual or alleged breaches of professional duty. So you don't actually have to be in the wrong to trigger the policy. If the client is making an allegation that you have breached professional duty that's caused a loss, then the PI should respond. Um, I don't know too many builders that go through the course of a project, and when they're asked for their opinion or make a decision, it's like, actually, we're going to stop. We might refer to the engineer. We might refer back to the architect designer. Like, yes, on major things, but I would say there would be a series of micro decisions that get made that in isolation of each other probably aren't a big deal. But when you stack them on top of each other, you could face, some real costs towards the end. So, I'm not saying that all builders have a huge exposure for PI, because it is varying. But I would say all builders probably have some exposure. I'm not aware of too many that have just absolutely zero. Coordinating consultants is a big one. Liaising with engineers, certifiers, fire engineers, architects, all that sort of stuff. Um, there's there's always going to be an element that you're kind of contributing, if not actually at least perceived by your clients, and that may give them cause to want to litigate you. Another common kickback we get is, "Oh, well, I got a contract and I'm build only, I'm not design and construct." Once again, your contract's great. You need to be in court to prove it, and getting there is expensive. So yeah, I would say what we're going to talk about later in terms of the solution we have, it's a relatively low entry from a cost perspective, but it does plenty for you. Just to kind of carry on from that, my couple of common misconceptions across both coverages, like my contract works just covers all my projects. It's just not true. As with any insurance policy, there's a scope of cover which says what projects are and aren't covered. Usually it's the type of works, usually it's the value of works and the duration. They're the things that we see the most issues with. And going back to my situation before where a project runs for 2 years, you need to go back in your brain 2 years and think, well, hang on, what insurance did I have at that time? Is it now suitable? So duration is something that you should be constantly checking, and also value of works. Also, the engineer and architect carries all the design risk. Look, they might carry the bulk of it, 90%, 95%, it might be 50-50, but to say that they carry all the design risk is not true. And the reason I know that is because we also insure engineers and architects and designers. So we see on the flip side of what the insurers from a PI perspective do on an engineering front, and particularly if you hold the contract or the relationship with the client and then maybe engage the engineer yourself, they're coming back to you. They're not going to go litigate the engineer. They've got no contractual recourse. There's no terms and conditions that the engineer is working under. The engineer's agreement might be with you. So yeah, there's risk management strategies you can adopt as well to minimize risk, but there is design risk throughout. A subcontractor's insurance protects you. No, generally not on a PI front. Public liability, it's kind of more common for policies to cover other parties, particularly under a contract works. But a PI policy is fairly firm in the sense that it usually only covers the insured entity. It won't cover any additional principals or contractors usually. So you'll find that the engineer's insurer, and it won't even be the engineer, it'll be their insurers just looking out for their interests. And sometimes they're aligned with yours and sometimes they're not. So that's important to contextualize that, thinking that we're all on the same team is not always the case, because when insurers and lawyers get involved, there's a lot of finger pointing and not a huge amount of accountability usually. And the last one, I only need to check my insurance once a year. That kind of feeds into what I mentioned at the top. Like, don't just do your renewal and forget about it. You probably have a fair idea of pipeline for, 3 months, 6 months or whatever, but so much can change in the course of 12 months that you really should be having a look at, your insurances, checking in with your broker. Every time you sign a new contract is kind of a good, if you kind of build it into your process with, if you're doing the contracts, if you've got like an office manager or a contract administrator, project manager, someone within your organization that signs up new contracts, part of that process is do an insurance check. We're going to check limits, we're going to check values, we're going to check duration. Tick, tick, tick. Okay, great. Now what we're going to do is check the terms of the contract, make sure that the indemnity and liability provisions are suitable, and you might want to get advice from either your insurer or your solicitor in that respect. So just try and build in as much of that you can in your process, and even throughout other, team members in your organization, to try and share the load so you've got more than one set of eyes on it, making sure that, insurance is something that people are factoring in. I wanted to touch on defective works because this is probably another big area that we see issues. Understanding what is covered and what is not covered. So usually a defect on its own is not triggered, does not trigger physical damage. So, if it's defective, they're not going to cover. So the cost of correcting whatever the defect is usually excluded, but most decent policies will cover the defects to other property that is non-defective. So if you put in a steel beam and it fails because you didn't have the right fixings or something like that, and the beam fails, the cost to rectify the bolts and putting them back in is not covered. But when the beam falls down and takes out half the project, that resultant damage can usually be picked up. There are also limitations around access to defective areas, and then improving original design. So just keep that in mind. Re-engineering things. If you put the wrong bolts in and now we need to increase the thickness, the sustain, all that sort of thing, are usually not covered. And each insurer kind of does this differently. Believe it or not, there's kind of a standardized way of insurers handling defective works. If you go on a little Google, you'll soon find out. But this is probably, from the insurer's point of view, and in contract works land, this is probably the most disputed area of coverage and the thing that lands insurers in the most amount of litigation, usually with their own clients. So yes, it's a lot of arguing about what is defective, what is not defective, what is resultant damage. It is a very, very, very complicated area, and if anybody's ever experienced it, they'll know exactly what I'm talking about. I wanted to go through just 3 different practical risk examples just to show you how each policy is triggered differently. You've probably got a fair idea based on what we've said, but I just want to kind of visualize it. So material damage, pretty straightforward. House is nearing completion, water pipe lets go and floods the property. Fixing all that, getting it back up to scratch, usually covered without too much of an issue. You might be saying, well, that's the plumber's fault. You could litigate the plumber's public liability, but getting that resolved in a timely fashion and getting them to agree, it will be a lot quicker to go through your contract works and get your contract works insurer to deal with subrogation from the plumber. The site injury, subcontractor's apprentice falls through an open stairwell. Well, they failed to install appropriate void protection. A lot of these issues kind of take time to, they're more long tail exposure. So if a subcontractor falls through an open stairwell and injures themselves or their apprentice, you're probably not going to have any demand for, maybe 6 months, maybe a year, maybe 2 years. You might think it's gone away. What happens in the background is that apprentice or the employee would be lodging a workers' compensation claim. They would be getting their wages paid, they'd be getting their medical costs, and they would be slowly returning to work. Once that workers' compensation claim is finalised, that workers' compensation insurer will come after you as the principal and say, guess what, you failed for this, and in this example, you didn't have appropriate void protection. We are now litigating you, and that is your public liability because the subcontractor is a third party to your business. These issues are very expensive and happen a lot. They're referred to as workers' compensation subrogation or worker-to-worker injury. You'll see on your public liability policy, you've probably got a much bigger excess for these types of claims, usually 25,000 kind of as a starting point. The other thing to consider with these types of issues is your public liability will respond to the civil claim, so the litigation from work cover or from the claimant directly. It won't cover costs associated with WorkSafe investigation, or if you're getting fined or have to appear at court for any sort of criminal allegations. There is other insurance for that, which I'll get through in a minute. Design and construct professional indemnity. So a warehouse roof collapses during a storm. The builder engaged a structural engineer, followed the design, but the owner still pursued the builder. So, you might say, well, it fell down because of the storm. They might be saying, well, that might be a contributing factor, but really the engineering was no good. You might then say, well, hang on a sec, we didn't engineer it. Go to them. The client will say, well, hang on a sec, I've got the contract with you. So you'll get defended in that situation, even if you're not doing the design, even if you didn't sign off on it. And you don't need a formal D&C contract to have this exposure. So, managing contractors, managing engineers, fire consultants, that might be enough to trigger it. We can provide many examples of where PI might be relevant. Copyright's another huge issue that we see. We'll probably do another section on copyright at a later date, but give it some serious thought. Additional coverages to consider: management liability. That's what I alluded to before from a WorkSafe. So there's a section under management liability that gives you statutory liability. So that's fines and penalties, usually, WorkSafe, health and safety, things of that nature. Other coverages: employment practices liability, unfair dismissal, sexual harassment, directors and officers cover. You run a company, there's probably 1,000 pieces of legislation in the Corporations Act that you can be held to account. So it covers those sorts of things. Crime is another big one, which ties into cyber insurance. Systems getting compromised. You might think, well, I run a physical business on site, I don't have a cyber exposure. I would assume that you're, invoicing, you're emailing, you're relying on CRMs for scheduling. There's a lot of reliance on the digital world, as well as things like, crime and social engineering, where people are basically trying to steal your money and rip you off. So they would be my first two. We touched on it before, the tools and equipment. That's something, based on needs. It's, the amount of tools that get stolen these days, and then the amount it ends up costing you to insure it. Like, I just don't know how any business runs. You almost just need to build a margin into your rates to replace tools every 6 months. So that kind of gives you a good overview. Now, what we've done in conjunction with the SBA is developed a contract works policy and a design and construct PI policy. Both badged SBA. We've got some sharper rates than what the standard rates are. And more importantly, I think we've had lengthy discussions with underwriters on both policies as to what SBA do. So they're aware of the high performance nature. They're aware of, differences in what you operate. And we've kind of built those policies to really kind of, be as suitable as possible. So what we can do for your business, we can review your insurances. We can go through it. If it ain't broke, don't fix it. We're not going to sit there saying, yeah, come deal with us. If you've got a decent situation, then we'll tell you. We can obviously give you advice and make recommendations. We can identify issues, gaps, and then thirdly, we can, to our existing clients or ones that we've quoted, we can review contracts, and that's via an agreement we have with Meridian Lawyers, and that is a complimentary service. They will have a look and see what shortfalls you have in your contracts. Now, that's when you're asked to sign third-party contracts rather than reviewing your own agreements. So that gives you a bit of an overview about what we do. If you want to contact us, there's all our info. When we send through to, we'll probably send a thank you email. We'll give you a few other contact points with the rest of the team. But yeah, reach out. You've got my details there. Tricia is our senior broker that manages a lot of our construction risk, along with Michaela, who's pictured there alongside me. So look, we're committed to SBA. We appreciate you guys having us here today, and yeah, I'm more than happy to throw it open for questions.
Awesome. I am going to probably be a little bit selfish because I've got a couple that I've already written down here. So I just want to just circle back to some stuff you were talking about before about like workers' comp. So obviously, as business owners who have employees, we're going to have work cover. And you were talking about before, so say if there was an industry an injury on site, so say work cover kicks in. So does our work cover, okay, that covers the person who's injured, is that right?
Yeah, so the scenario I gave was where it's an employee of another business, not
Oh,
your
okay.
own. So
Okay.
where it's your employee, it's more straightforward in terms of the workers' compensation policy will just respond, get them back to work, pay their wages. you still may be faced with the WorkSafe investigation costs, whether it's, a third party or your own employee. So that management liability or the statutory liability is important, whether it's your worker or someone else. But in terms of the recovering off of your public liability insurance, that would only be where it's a third party employee that's getting injured.
Yeah. Okay. Cool. All right. That's good because the way that I kind of interpreted it was that your insurance is suing the other insurance that
No,
you've
yeah,
taken out. So which kind
no,
of didn't make sense. All right. But
no, that's right.
but
Yep.
that makes sense. Now with your
Wouldn't put it past
PI,
workers' comp
you
though to try that. To be honest, they
so
couldn't
yeah.
do it because they couldn't do it because
I wouldn't.
you can't sue yourself, but
Yeah,
they do
I
stuff.
wouldn't. I wouldn't put it past them either. Just with
Yeah,
the design and construct PI stuff,
yeah,
and I'll need to apologize because as soon as it rains here in Warrandyte, my internet gets slow, so there might just be a small delay. So if there is a delay, I do apologize. Um, so with the design and construct, even if we're not designing, so to speak, like designing the building, would we still take out a design and construct public indemnity policy?
yeah, yeah. So the design and construct is a little bit misleading. It's what the insurers call PI for people that do blue collar stuff is probably the
Okay.
best way to understand it. And the reason they differentiate because on a standard professional indemnity policy that say an engineer would take, there's an exclusion on there that says something along the lines of we won't cover any claims that relate to sale, supply of goods, manufacture, assembly, installation, servicing, all that sort of stuff. So it writes out basically anything blue collar, whereas a design and construct policy provides a right back to those blue collar services that trigger back to a professional negligence. So if you are professionally negligent in the course of installing something or manufacturing or servicing hands on, then it triggers the policy versus a standard coverage. They would say, well, you manufactured it, you installed it, there's no cover, full stop. So yeah, the design and construct is just a name. You don't have to be working under a D&C contract to have it. You can just be a builder under a.
Yeah. Okay. So I guess the design could also just be substituted out as like consulting or whatever. Yeah. Just but being
Exactly.
yeah.
Yes, so
Um.
they'll have like a lot of design and construct policies will have a list of quote unquote professional services, and it doesn't mean you have to do those services. It just means they're what triggers it. So if
Yeah.
there's allegations because there's an issue with you know design or architecture or project management, you don't have to have done it. But if the allegation is that you failed in your duty and that is the proximate cause, that can still trigger the policy.
So I'll run a scenario past you because it's probably very similar to, I guess, a lot of the audience here and a lot of the audience that are probably going to listen to this. I'll listen to the recording. So in my business, we're involved from pretty much day one a lot of the time. Clients are coming to us first. We're recommending designers, we're recommending engineers, etc. And then
Yep,
we're involved in a lot of the back and forth throughout the project.
yep,
Throughout that design phase, talking about buildability, talking about
yep,
cost, talking about performance, talking about, other design changes, which we think would
yep,
benefit the project, but we're not physically drawing, we're not
yep,
physically calculating beams,
yep.
we're not selecting tapper or anything like that.
Uh-huh.
In your professional opinion, would that put us in, I guess, that need for design and construct indemnity insurance?
Do in the situation here, like with engineers and architects, is the client engaging them under separate contracts agreements?
They're engaging them directly.
Yeah. So that is a kind of a lesser exposure.
Yep.
They could still make an allegation towards you. And what often happens in litigation is every party gets named that was on the project. So
Yep.
if something goes wrong, like the building fails, it collapses, that like the client and their legal representation probably won't know if it was because you didn't build it right or because it wasn't designed right. So
Yep.
if nobody wants to pay and rectify it, then what they'll do is they'll send a demand and they'll send a demand to you. They'll send a demand to the structural engineer, the architect, the building designer, the draftsperson, the certifier, the surveyor, literally anyone that touched the project. If there's a project manager, and they'll name you as like first, second, third, fourth, fifth, sixth, seventh defendants, and basically see what sticks. You
Yeah,
might
okay.
sit there and be like, well, hang on a sec, it's clearly a design issue, but your problem will be that the structural engineer will have their PI insurer who's appointed a lawyer. All these other professionals will have their own lawyers. And if you sit there without insurance, you have to pay for your own lawyer to, write the letters, prepare defenses, attend mediations. So that's what I'm saying is, yes, the exposure is lesser because it's less likely you're going to be liable for that loss. And if you
Yeah.
are, your share in liability will be relatively small or theoretically small. But it won't stop your client from coming after you and saying, well, like you should have done better because, you're a builder and the structural engineers substituted steel for timber because you said we want timber here because of this performance or whatever. It's easy to attach this cladding or whatever it might be. They'll say, well, you're now liable for that because that was under your instruction. You wanted to do it. So, yeah, the situation you gave where clients are engaging those professionals directly and you're staying out of it, more or less completely. The issue is going to be the perceived involvement in the design, in the engineering, where the client is probably going to litigate you anyway.
So the risk would lie with proving your innocence because
Yeah,
you still need to engage a lawyer to then, I
yeah,
guess, yeah, okay. All right,
yep. And you
cool.
and
All
you
right.
have to prepare. You have to prepare expert reports saying that it was a design issue, not a buildability, because the I've actually got a $5 million claim right now that's going on, and it's actually similar to the scenario I gave from PI where it was a commercial shed, it failed. You've got the structural engineer saying actually the steel wasn't done to my specification, it wasn't thick enough, and the fixing points weren't enough. You've got the fabricator saying, no, it was all right. It was the design that was crap. We did it exactly per the design. You've got the builder in this situation who's actually engaged both. So they're fighting the client on the claim entirely. Once that kind of gets sorted, then they're going to come back to the structural engineer and come back to the fabricator, who I would almost guarantee doesn't have PI. So it's probably going to fall back on the builder and the engineer as to share those costs. So that's probably the other wrinkle is where a product fails and you get litigated. You might say, well, it wasn't built right. Like we specified, or it was specified, and we asked for this thickness and that. It wasn't done like that. You're going to potentially carry the can where one of the contractors isn't insured adequately.
Okay. I mean, it hardly sounds fair if there's, you're almost saying don't get PI insurance because then you won't get sued because you don't
Yeah,
have any
yeah,
money to
yeah.
pay anyone.
There is a
Um,
school of thought out there for that.
yeah, yeah, but that's not good. It's not good for business.
It's not,
Um,
well, the reputation side is something else to consider,
yeah,
and
true,
keeping the
true, true.
project moving
Yeah.
and whatnot.
So I got another scenario for you. So in that situation I was talking about before with and I'm going to get to Darren Will's question in a second, Darren. So I won't be as selfish and hog everything. So I hope what I'm asking is valuable to people. We're being engaged typically without any other builders being involved to cost projects, and we're offering costing advice.
Yep,
If we're giving direction as the project kind of progresses,
yep,
and we're saying, look, make these changes, make these changes, make these changes, and we're pretty confident it's going to fit within budget.
yep,
And then there's budget blowouts, and
yep.
then we've got to go back for redesign. We've got to go back for more engineering. There's more costs. Are we exposed in that scenario?
Yeah, cost estimation is something that insurers are pretty tight on. A lot of policies will have some sort of exclusions or caveats for claims arising from estimates of construction, estimates of probable cost. Um, some will write it back if the estimates are provided by a quantity surveyor, but
Okay.
that is often an area, and particularly for our design clients as well, they face a similar issue where somebody comes to them and says, hey, we want to build this for X, and then end up building it 2 years later and it costs Y because materials have gone up and they've changed the project 1,000 times. So my advice with respect to cost estimates would be check the policy coverage, because each one will happen a little separately, and I can give a bit of an overview on how this SBA one would likely respond. I'll do that after, if you just kind of give me the context again, and
Yeah.
then I would probably be managing this with your own kind of risk management in terms of, disclaimers and comments around costing and outsourcing, QS where possible. So this is a potential area of risk.
Yep. I'll have a chat with Beck tomorrow and see when we email this recording out, that if we could
Yep.
also include that product that you guys are talking about, just so
Yeah.
they can to give you a little bit more context.
Yep.
I will quickly jump on to Darren's question, because I feel like I've been hogging everything. So referring to policy cover extending past completion, could product liability be triggered through a structural defect arising from home warranty insurance claim by the owner?
Difficult. I mean, each scenario very different here. Just generally speaking, the defect itself would not trigger the public liability. That would be excluded by, the defect that I kind of alluded to. But if there was a resultant damage from the defect, then potentially, yes, it could be a products liability claim. So public liability and contract works are not intended to cover defects. They're intended to cover physical damage, negligence arising from the same. So yeah, in that situation, if it was just a defect, it likely wouldn't trigger the products.
Okay. Awesome. Well, it is almost 6 o'clock, so I'm gonna wrap it up. Daniel, thanks so much for jumping on board, and it was a very engaging insurance conversation. So thank you for that. Even I managed to stay engaged for the whole thing, and I struggle to sit down most of the time. Really, I think as builders, I mean, we all know like the risk that we take on. I mean, I think if we really knew the level of risk that we took on as builders, like we probably wouldn't have done it in the first place. But here we are, 20 or so years later. I know Andrew, who's on this call, he's been doing it for a long time. He's crazier than all of us. But yeah, thank you for that, and hopefully the products that you're offering are going to be beneficial for some SBA members. I will close it out quickly. If you guys don't know, there's a huge amount of information on our website, www.thesba.com.au. A lot of our previous webinars and events are up there. If you're not already a member, you can also jump on and join up to become a member. It's really cost effective. If we're thinking about the discounts that we're getting, even just from products like we're getting from Weber Insurance, and then times that across all the other savings, it's going to pay for itself pretty quickly. Next month's webinar is going to be really cool. We're going to be joined by Sam Vivas, who has actually been on the Sustainable Builders Yak podcast before. And his company is Viva Homes, and he's going to come on and talk about an amazing prefabricated panel product that he's developed. It's a structurally insulated panel where the infill is actually straw. So talk about a full circle product and very sustainable product. And I've actually seen them at the Breathe Architecture event this year, and it is pretty bloody cool. Over the next through 2 or 3 months, we do have some live events coming up. One with Breathe, which we're very excited about, and it's going to be about circular economy and embodied carbon and I guess product specification. And then we've got a real cracker that is boiling away in the background with Bowens, which is going to be in November. So we've got some pretty well-known people joining on for those ones. That is it for me tonight. Daniel, again, thank you so much for joining us. And for those who couldn't make it, we will send the recording out to you and some information about the product that is a special offer to SBA members. So, Daniel, thanks so much. And thanks everyone for joining us.
Thanks for having me.
Cool. Take it easy, guys. Bye.